Well, hedge funds had a strong recovery in early April, recouping some of the huge losses made in March when the outbreak of war in Iran upended investment strategies. Now, in this world of increased volatility, but also geopolitical uncertainty, what does it take these days to outperform the market? Well, joining us now is Sterling Larkin. And Sterling, thank you so much for joining us. I mean, you also have an interesting story because you had the shop in Asia, basically, and you've recently moved to the U.S. So I want to explore that a little bit. But first, how can some of the smaller managers, is it difficult to keep up in a world dominated by these multi-strategy giants like Millennium and Citadel?
Good morning. No, that's a really poignant question. What's really exciting is I think in the next 4 years, there'll be more money made in markets than the last 20 combined.
Okay.
And the context of that is there's obviously a lot of bad news in the media at the moment and the headlines and the sentiment. But at the end of the day, the fundamentals are basically putting us in a Goldilocks scenario for the next 2 to 3 years.
I mean, the fundamentals at the moment look a bit, not ropey, but there's so much volatility, yes, which also creates opportunities. How did you perform through that volatility in March?
We basically come from a monetarist point of view and off the back of reflation, basically. So all the money that was printed through the era, as of right now, 26.3% of the global economy, not just markets, but the actual economy is bedrocked off the balance sheet of central banks. And that really is a fundamental driver why we're seeing, for example, in the last week, markets bounce higher, even though there's no technical reason why they did. There's just a girth of liquidity still in the system for good and bad reasons, but it is still there, and it's a fundamental reality of the world we live in.
And so where do you see the biggest opportunities right now?
Yep, equities. It's still equities. I mean, that was the whole point of the policy. And again, we're going to see a lot of volatility in fixed income, etc. AI, all these things are causing headwinds, but at the end of the day, that pushes it up the capital stack and into those risk assets.
It feels like March actually, really tested the multi-strat model for producing steady returns because so many people lost money given the market conditions.
I mean, it was a particularly unusual year, particularly in the US. It was the only year, even including the Great Depression, where the market went sideways for the most weeks since November of last year. And then obviously in the last 10 days, we've seen a rip higher. But again, that just talks about the underlying liquidity that's still in the real economy and obviously flowing through the markets. I mean,
what did you learn during that period? I mean, it feels like, it was yesterday, but it's moved on since.
Yes. I mean, politics rarely actually has a real impact on markets. I think politics this year is having an impact. You had a fantastic guest on a few days ago, Baroness, and she was talking about from a Keynesian point of view. And she's right from some degree, but you may want to look at it from maybe more from Friedman's point of view, a monetarist point of view, that liquidity is still under bit rocking the whole economy and has a massive impact. But we have seen this year with what's happening in politics here in Europe and obviously North America, that it did push the market sideways for an unusually long period of time.
Sterling, last time I interviewed you was in Singapore for a New Economy Forum, and since you moved from, basically servicing Asian clients to the U.S., has that changed the dynamic of the fund? I
mean, I've always really been passionate and focused on North America. And I guess living there, what's fantastic about being in New York in particular is you really see what's coming around the corner 2 or 3 months from now. And the sentiment is still very, very bullish. Politically, obviously, in the headlines we talked about before may have, some temporary whatever to them. But at the end of the day, there's still a lot of money in the system and there's a lot of money to be deployed for the rest of this year.
How are you using AI in your investments, and how will that be accelerated or changed in the coming years?
I mean, AI in itself is reflationary, and simply because we know there's some big IPOs coming out there, there's going to either be private savings or credit and debt, and that credit and debt has to come from the private market. We're talking potentially trillions of dollars, and that in itself is reflationary. So it's a good sign that it's not just central banks adding liquidity to the system. The private markets are going to be a massive driver of liquidity, which is exactly what money printing and MMT was designed to do 3 or 4 years ago.
But does it change? I don't know whether it makes it harder actually to stand out.
Sure, but I think on the net, AI is going to be very exciting. I mean, LLMs themselves, they're still quite dumb in many regards. People talk about AI as one big bucket, but there's a lot to AI. But we're talking about technology in 2003 or the electrification of the grid in 1915. We're still very early in these stages. And I think this is a multiplier that will have massive beneficial impact socially, but also markets and investors as well.
Sterling, how much do you look at the the longer term implication, what's happening in the Middle East for some of these financial hubs?
Yep.
Like, Dubai and others were really a pool of capital. Does that get questioned? Does it change over time?
Yep. I think where the market is misreading it is oil at the moment is actually is not necessarily inflationary, right, because oil is price inelastic. Where it obviously does have an impact is on the US dollar, and the US, for better or worse, in its actions, for military actions, is still a massive supplier, and where Europe and Asia still have to turn for LNG and gas and oil for the next 2 to 3 years. Whether that's a good or bad thing, that's for individuals to decide. But I still think there is a bullish case for why the US dollar ends up the beneficiary in this.
I'm sure you've seen, we've had some, really funny stories about gazumping and talent and how it's difficult to retain talent and hold on to it. When you look at candidates to hire, what kind of profile are you looking for? People
are passionate about markets. You really have to love this. Markets are going to continue to change. We are in an unusual period in the fact that technology is becoming a part of our day job, as well as understanding the fundamentals of economics. And at the end of the day, nothing's really changed in the fact that you really have to love what you do and have to love the underlying economy and the dynamics around that.
Is there a particular focus on less experienced traders or traders from the big shops that have been cut? I don't know if there are opportunities actually to swoop up talent at the moment, given it's a heated market.
It is a heated market. We're trying to embrace technology as much as possible. As I said, we're in 2003 of the tech era, so it's still embracing technology, but still using those, finding people who know the fundamentals of the 101.
How do you keep your talent? That's the other big question.
Hopefully passion as well. But we have a very unique strategy. We have a unique approach, and we've been very picky on our clients and our investors, and we love working with them and sort of build a rapport through that.
And over the next 12 months, what do you see as your biggest challenge? If there's one priority, I know it's never fair to ask for one only, but
yeah, the midterms are a great opportunity for the US, but obviously things are going to change. We're seeing a lot of geopolitics at the moment. There's probably a few more weeks of that, including what will probably happen in Cuba. But the Republicans have to get serious about the midterms. They know that, and let's see how that plays out and what impact that has on markets as well.
Okay, Sterling, thanks so much for joining us. Sterling Larkin. Now, up next, of course, we'll have a roundup of the markets. We'll keep an eye on everything that's happening in the Middle East. But up next, it's Bloomberg Brief, and this is Bloomberg.